My name is Louis Cohen. I'm the co-head of a legal practice, and you might say, what's a lawyer doing at an engineering and economics conference? And I kind of asked myself that. Somewhere along the way, you're going to bump into the law, even though you're doing really amazing stuff. And I'm thrilled. We're at a firm called Cahill, and this is all we do, and we love it. I couldn't be happier here to be with Brett Palatiello from Eigen Layer. And Brett is going to start us off with a fascinating presentation on Eigen Layer. I suspect many of you have at least some idea of what the protocol is about, but there's so much to it that I think Brett, even in a 20-minute presentation, is only going to be able to scratch the surface. Brett and I are then going to discuss some of the topics that come up in Brett's presentation, and then, time permitting, we're going to try and allocate a bit of time for questions from all you guys. So as we go through, please think about questions, things you want to ask. And if we can't answer them now, we can always follow up. You can get in touch with us. So thank you very much. So
thanks, Louis. Can you hear me? Yeah. All right, so I'm sure you've all heard about Eigen Layer in some way, shape, or form. So today I hope to clarify what at least a portion of it is. So let me hop right into it because there's a bunch. Ideally, I would like to get everybody sort of brains flowing on different ideas. So I'll jump right into it. So on Eigen Layer, you have a group of stakers who, for let's sake of example, let's say they have staked ETH. Okay, you have these group of stakers who allocate to operators. What do operators do? Operators bring compute and bandwidth to AVSs. So AVSs are actively verified services. So you can think of anybody that's trying to start up a network. So if you're, somebody trying to start up a proofer network, well, how do you get people to actually, start writing proofs and things like that? So that's where operators come into play. So when you are a staker, you delegate capital to the operator. That's effective essentially immediately, or as quickly as Ethereum can process it. But if you want to withdraw as a staker, it takes 17.5 days to complete, which I will get into why that's the case later. So an operator has this notion of total stake. So the total stake for an operator is the total amount of a specific token that's been allocated to a specific operator, right? So in this case, we have a whole bunch of stakers who happen to allocate 100 ETH, staked ETH, to operator 1, 2, and 3. So operator 1, 2, and 3, all three of them have what's called a total stake of 100 ETH. So what do the operators do with their compute and now their stake? So operators participate in operator sets, which are created by AVSs. So what is an operator set? It's a group of operators that perform some task and have some stake token or tokens that has been delegated to them. So operators, they then decide, okay, economically, which operator sets do I want to participate in, based on the task that they have to perform. And then they ask the AVS, can I operate on your network? And then the AVS says yes or no. And that's instantly. So I can go to an operator set and say, hey, I would like to register for your operator set. And they can immediately say yes or no on chain. So from there, AVSs can reward the operators and penalize them for any misbehavior related to the tasks that they have been assigned. So the total stake for an operator set is then the total stake of all of its operators. Okay, so before you have total stake of 100 ETH across each of the operators. All three of them in this example are participating in operator set 1. So that means there's 300 ETH restaked ETH in operator set 1. Okay. Now, some of you who've studied Eigen Layer previously are familiar with attributable stake. So to confuse you a little more, we've renamed it unique stake. So unique stake is the amount of total stake that is uniquely or exclusively slashable by a specific operator set. So each operator, we have operator 1 here, and he has a total stake of 100 ETH. He decides to participate in 5 different operator sets across 4 different AVSs. So now that operator says, I want to allocate a proportion of my ETH to these each operator sets. And in the event I do something wrong, you have exclusive rights to slash the ETH that I've allocated. So you don't have to set allocations at the individual level, have to be between 0 and 1, and in total, they have to be between 0 and 1. So you can't provide unique stake or slashable stake to more than one operator set at a time, which is different than probably what a lot of people think of Eigen Layer, which is you have this whole pool of stake that's slashable by anybody. This is not how that works, but I'll get into later how you can revert back to that old model. So increases in allocations, just to give you some ideas about the parameters. Increases in allocations are effective after what's called an allocation delay. So an allocation delay is there's an issue of operators potentially acting maliciously, which is they allocate 100% to some AVS that they control. They then slash that AVS and take all the money. So we need a window of time where stakers can say, oh, you've changed that allocation. I don't like that. So now I need to watch and see what it is you're doing. And if I want, I can withdraw before you make that change. This is part of the presentation.
It's what Microsoft does.
Yeah. We're sponsored by Microsoft. Okay. So decreases in allocations, I had mentioned previously, that 17.5-day window. Deallocations, so if I want to lower my allocation, my unique stake allocation, that also takes 17.5 days, but it is slashable in the interim. Okay. And again, I'll get to the 17.5 days in a bit. So again, similar to total stake, unique stake is the total amount of unique stake that's been allocated by each operator to that single operator set. So if we take the simple example, the stakers, they have 100 ETH each in total stake. The operator set has 300 ETH in total stake. They allocate 0%, 10%, and 20% in unique stake to operator set 1. So now operator set 1 now has 30 ETH in unique stake, 300 ETH in total stake. So let's run through a specific example. Okay, so let's consider AVS1, the operator set that we were just working with before, and they have a task A, which outputs 1 or 0, right? Think of it as like the Yankees or the Mets or somebody won, yes or no. So operators 1, 2, and 3 are part of operator set 1. They allocate the proportion of 0, 10, and 20% of their unique stake to operator set 1. All operators are honest, no bribing. We can say the value, either 0 or 1, that receives more than 50% of the stake weighted output is deemed correct, which is a simple consensus model. Stake weight can be based on, we'll show after, based on total stake, unique stake, or some combination of the two. So in this example, each operator outputs, they're all honest, they output 1 as the correct answer. So without any malicious actor, we know that the output should be 1. All right, so now we have an attacker, okay? So the attacker outputs 0. So if they want to attack and the weighting is based on total stake, how do they go about doing that? Well, the attacker accumulates 301 ETH, which is more than 50% of the total stake. They then cast their vote for 0, and now the task has been compromised. However, the operator or the attacker is not slashed. There's going to be other penalties, like they probably won't get the reward or something like that, but they cannot be slashed for anything that they've done wrong. But it does take 301 ETH for them to actually perform the attack. Now let's say it's weighted based on unique stake. So instead, they output 0. The attacker, that's wrong, that should say 30.1. The attacker only needs 30.1 ETH, which is more than 50% of unique stake, and is able to manipulate the results of the task. So now the attacker can be slashed for up to 30.1 ETH. So the previous example, the attacker needed to accumulate 301 ETH. That was not slashable in the event they did something wrong. In this example, they have to accumulate 30.1 ETH, but they can be slashed for up to 30.1 ETH. So just a quick comparison. So using total stake has a higher capital requirement, but there's no slashing. But unique stake, you have a lower capital requirement, but there is slashing, right? So how do we get the benefits of both potentially? So a simple example would be requiring consensus based on both total stake and unique stake, okay? So what you do, so the correct answer is the one that it needs to be agreed that both the votes based on total stake and unique stake need to be the same in order for the task to come to consensus. If not, safety has been violated. So in this example, the attacker needs to accumulate 301 ETH to be more than 50% of the total stake. They need to allocate 10% of that to the operator set, which can be slashed. So in the event they do something malicious, like submitting 0 as the output for the task, they will lose up to 30.1 ETH. So in this example, it becomes much more difficult or capital intensive for an attacker to launch an attack. And this, so for example, before you only needed to accumulate 30.1 ETH, but now you need to accumulate 301 ETH. So you can think of it as Sybil resistance for anybody that's trying to perform an objectively attributable fault. So why did we do this instead of the pooled slashable model that most people are familiar with? Well, this gives greater control over slashing risk for AVSs, because before it was stakers provide stake into a pool, they decide which AVSs they want to allocate to, and as a result, the AVSs are inadvertently exposed to the risks of one another. So this allows us to guarantee a certain amount of stake can be available to any AVS if there is some sort of malicious activity. Which relates to the second point. They know exactly how much slashable stake they'll have at any point in time. Whereas before, you had no idea. You'd have to predict what all of the other AVSs that have also been staked, what their likelihood of slashing and things like that are. There's no need for a veto committee. So slashing is localized to AVSs, whereas before, like I mentioned, they're exposed to each other. So let's say there was a bug on one AVS that led to slashing 50% of all the stake. Well, you need somebody to come in there and say, no, for the whole ecosystem, you need to say, no, that was a mistake. We're going to revert that, or else the whole system collapses. And that results in permissionless onboarding of AVSs. But because before, if you need the veto committee and you're an AVS, you need to convince the veto committee that you are not a huge liability on the ecosystem. So let's get to the 17.5-day window, which is something that I've been working on. Yeah.
So, just trying to ask a question. The slashable stake, I understand, is sort of a clear cost of participating in that.
Yeah.
The non-slashable stake, it seems like I can understand how it provides some civil resistance, and that you have to come up with a lot of ETH potentially in order to subvert that system. On the other hand, the economic cost of that should be low.
Yeah.
Right? Because if it's not very risky, and if I convince, let's say, Coast that it's not risky, maybe Coast can lend me all that ETH for like a small interest payment.
Yeah.
So the cost of attack would still be pretty low.
Pretty low, yeah.
Okay,
Yeah.
So what's kind of the point of having non-slashable stake?
Yeah, well, so in general, blockchains also do have mechanisms where there is no slashing. So there could be tasks where you don't need slashing at all, which I'll get into. But so if you think of it that way, it could be, so one of the first things I thought of when I heard of this model was I take out a flash loan, I immediately attack it, some relatively inconsequential interest rate, yeah. So there are a few things that make, given the allocation windows and things like that, that make that impossible. So it ends up being the cost to borrow that amount over the 17.5-day window. So we've tried to increase the amount of interest that you have to pay over a certain period of time. But yes, that's a valid.
But I think there is maybe I'm going to say something stupid. There might be another answer to this very interesting question, which I think is related to the original intuition of Ethereum. If I own these 300 units of cryptocurrency, I stand to lose if the value of the currency goes down. And if I attack the system, maybe it's going to trigger a drop in the value of the cryptocurrency.
Yeah.
So in a sense, the part that is slashable is creating incentive for me because I don't want to be slashed.
Yeah.
And the part that is not slashable maybe is creating incentives for me because I don't want the value of this.
Yeah.
Now,
Yeah, so an interesting point, because token toxicity, which is what you're talking about, does not transfer. So if you're restaking ETH, token toxicity, to the extent it does apply at all, does not transfer over to the AVS. So this leads to the question of, okay, well, what about dual staking, where you have more than, and I hate to add sort of another dimension to all of this, but which is, okay, well, I can get some of the benefits of restaking ETH, but I can also restake this other token, which does have the token toxicity properties that you mentioned. So yes, there's a lot to think about. Yeah.
What is the set of assets that you could use to restake?
Any ERC20. Any ERC20. And
It can also just be initial staking, so like.
Yep. Yeah. So I have a question for all of you, which is something like, you'd think we should have the answer to, but I think it's still quite vague, which is what is restaking, right? So like I've told you what is essentially you're staking an asset that's already been staked. What exactly does that mean? So that's another thing to think about, which is like, what exactly is restaking? Because on here, if I'm restaking ETH, Ethereum has priority slashing rights to the ETH.
The thing about it is there's a change in the opportunity cost of time.
Yeah.
I can stake at Ethereum and restake here.
Yeah.
And staking at Ethereum is no longer a competitive option. Whereas if you're just saying like, look, I have a Uniswap token here, I can restake it at the platform, but it's not really restaking. It's just staking versus putting it at a lending pool or something.
So you're saying instead of staking on Ethereum, receiving the LST, and then restaking onto Eigen Layer, that you wouldn't rather do that than.
What Fahad's saying is that many tokens have no natural staking as an alternative, like a uni token by way of example.
Yeah.
Therefore, it's not restaking when you use it here, it's just the initial staking. It's the only thing that's really
Right, but what I'm also saying is that, so normally when you think of two investment options.
Yeah.
You're trading off and getting your best optimal portfolio. But
Yeah.
when I think of restaking, I think of it as like, I can have my cake and eat it too all the time, right? Like,
Yeah.
I can
Which
restake
isn't true.
Ethereum.
Which isn't, yeah.
I'm
Yeah.
saying conceptually though, like the idea that I could get the yields from taking an Ethereum and get something else.
Yeah.
It's no longer an either or that I gotta put
Yeah.
here or there.
Yeah.
So it could be conceptualized as a reduction in the cost of the opportunity cost of capital.
In a sense, yeah. In my opinion, it results in a small reduction in the cost of cap, but yes, but there are, yes.
This is one of the most ancillary staking, because it's not a restake.
Yeah.
But it's not a concept. I think.
Yeah.
I don't want to call it rehypothecation because I know it's different, but with let's
Wait,
say.
I'm sorry, we can't, could we use mics for the questions in the
Yeah,
front,
sure.
please? Because we cannot hear back here with you guys. Thank you.
You got to turn it on.
Yeah, thank you. Oh, it's fine. It's working. Yeah. People are making me saying the rehypothecation word thrice.
Yeah.
But it's fine. So I understand it's not rehypothecation. It's like, let's say rehypothecation with bipartite graphs, right?
Yeah.
And you have something new, which unique staking. So can I draw a corollary with the traditional finance literature with the haircut phenomena and the unique stake? Because what essentially the objective is, like, it looks like the objective is to have avoid certain attacks, like let's say avoid cascading attack, like so can I approximate this unique stake with that phenomena, like a kind of a reduced form haircut?
Maybe. Let's talk about it after. I don't know why I'm making that question more intense in my head, but let me think about it.
Clarification question.
Yeah.
Here's the audience. So you're talking about something new. I don't think the concept is.
No, so originally it was, we called it pooled shared security. So what that is you have, there's a big bucket of ETH and they opt into a bunch of AVSs, and the AVSs at any point in time can slash that unit of stake. Whereas unique stake, it is exclusively slashable by only one AVS. This is new. Yeah. This is something new, but But if you want, and I'll get to a little later, if you want that model as an AVS, you still have the option to do it on Eigen Layer. But the trust assumptions are different. So like before, it used to be the case that if a staker opted into two AVSs, those two AVSs are inadvertently exposed to one another. Whereas now, two AVSs can agree, hey, we're related to each other, I trust you. We can enter into agreement where we share an operator set, and thus sharing the unique stake of one operator set. So you would have multiple tasks if you're an operator related to two AVSs, for example.
So just for clarification, so what you're trying to do is you're trying to raise, you keep the exposed cost of an attack of the same, but the ex ante cost up. Is that what you're trying to do?
In a way, yeah, I think so, if I understand that right.
Yeah, because you have to have the bigger stake for the total.
So, yeah.
Well, it sounds like you're really what you're trying to do is create optionality for AVSs, really, so that people can optimize. So
Yeah.
you can approach in different ways. May I suggest to the group, there's going to be tons of questions. Why don't we let Brett continue with the program, and then we'll get to more questions.
Yeah. So back to the 17.5-day window. Why is it 17.5 days? So how can we guarantee that there will be a certain amount of slashable stake over some particular period of time? So we inadvertently made an assumption that a fault was objectively identified and then immediately slashed. But that's not how it works in the real world. There is a time period between which a task is created and when it is ultimately slashed. So the slashability window is the maximum amount of time between a task is assigned and the slashing of an operator can happen. How long should that be? So we know the slashability window should be less than the amount of time it takes to withdraw or deallocate unique stake from an operator set. Why? Because I should not be, as a staker or an operator, I should not be able to create a slashable fault and not be slashed for it. So I shouldn't be able to withdraw before the slashability window is over. So currently, both the withdrawal delay and the deallocation delay are set to 17.5 days. Why 17.5 days? So 17.5 days is comprised of 4 different things. So we take 7 days to actually observe the fault. So, you know, if you're somebody just operating on the network and you view somebody did something wrong, we give you 7 days to do that. You submit a fraud proof to Ethereum, and we leave 3.5 days for some buffer for censorship on Ethereum. That's the reason for the 3.5 days there. So you submit a fraud proof. That fraud proof is either true or false. And then potentially you go to the governance of the actual AVS to determine whether or not you would like to follow up on that slashable event, because it could be a bug, right? For whatever reason. So if governance says, no, it was not a bug, well, now you need to submit a slashing request, which again, accounting for potential censorship on Ethereum, we're giving 3.5 days to be able to do that. So, so considering the withdrawals and deallocations over that window, we can guarantee how much the minimum amount of stake that will be available for a specific task over a specific slashability window.
Can you clarify what you mean by censorship on Ethereum in this context?
Yeah. So in this context, it would be for whatever reason. I mean, 3.5 days is actually pretty arbitrary, to be honest with you. It was based on something else. So what is the right number for that? You guys tell me. But yeah, so it would be if for whatever reason the fraud proof for the slashing request wasn't put into a block by anybody on Ethereum or attested to on Ethereum. So I've given you a lot. There's a lot of open questions. I'm sure that you can point out, not only just understanding this, but like figuring out how to use this. An allocator role, like for example, at this point, we have the operators making allocations. So if I am a staker, I essentially choose a operator that I allocate to. Whereas it could be the case that the staker determines their allocation and the operators passively accept the allocations on behalf of the staker. What is the optimal quorum construction for different types of tasks using total and unique stake? Optimal penalties, slashing, non-slashing, slashability windows, what to do with slash funds like StakeSure. And I mentioned sharing slashable stake to your question about how do we get back to the pooled model if we have two AVSs that actually trust each other and relying on each other. I'll leave with that.
So this is, I mean, this is fascinating, Brett. There's so many questions. I'm sure you all have a lot of questions. I've got some questions. Maybe just kicking off, Brett, you went through in some detail how the slashing window would work when the asset being used was ETH itself. But you also noted that other ERC20s, including your own token, the Eigen token, could be used as content for slashing. How for stake? How do you think about slashing windows across arbitrary ERC20s?
It's a good question. I don't have a good idea about that. I would say we're more thinking of it in terms of what type of tasks people are doing as opposed to which tokens they're staking. But there is considerations depending on whether something is, quote, restaked or not. So for example, on Ethereum, if you're restaking ETH, Ethereum has the priority rights to slash the underlying ETH. Whereas if you're an AVS, you get what's left over. So we can guarantee a certain amount of slashable stake if you're restaking ETH, including the amount that gets slashed on Ethereum, not just by the AVS. Whereas if you just staked any ERC20 token, let's say somebody has their own, governance token or something like that, then it would be different because they have priority rights over slashing. So there's nuances with different, like LSTs, for example, are, and it doesn't relate directly to slashability windows, but sort of the economics of if I restake an LST or if I stake an LST, then the underlying ETH, if somebody is slashed, doesn't go anywhere. So they lose their staked ETH, but the ETH is still in Lido. So whoever's left in the Lido pool now has a greater claim to the ETH that has now been taken, or the staked ETH that was taken away. So
yeah, no, I think that it presents why having so many smart people think about this is so important, because there's a lot of potential attack vectors that have to be used. You mentioned, the possibility of reallocation. What are some of the game theoretical issues? Because when we think about potential attacks, you highlighted one type of attack, which was compromising the actual AVS. But there are other types of attacks as well, including compromising the overall system or other, indirect attacks.
yeah. So now with unique stake, a lot of the cascading attacks are potentially, mostly, or at least as far as I'm aware, solved for, because now each slashing event is isolated and doesn't affect the entire system. So that was the big solve for us. And from a customer's perspective, a lot of AVSs viewed other AVS as liabilities to their own AVS. So there's a bunch of reasons for that, but the biggest issue for us was the fact that if I'm an AVS, I need to know exactly how much slashable stake I have. I need to make it as difficult as possible for somebody to, because now, before you used to use all of your stake to okay?
Not rehypothecate.
Yeah, to reuse across the ecosystem. So that gave you, you could have 300 ETH worth of slashable stake, whereas now you have to split it up. So it's technically less capital intensive. So how do we bring that back? And that's how we introduced total stake.
Got it. Brett, can you talk a little bit of protocol layer governance? I know when you launched, the Eigen token was meant to be part of a sort of a meta layer. Can you at least give us just a high level on that? I know that's been one of the trickier elements.
Yeah, you might have read the white paper. It's called intersubjective staking. So you can think of it as a layer above objectively attributable faults. So objectively attributable faults are anything that can be observed on chain to be right or wrong. A intersubjective fault is one that all of us in this room can agree is true or false, but is not definitively provable on chain. So like, are the Mets in the World Series, right? We can all agree that they are or the Yankees in the World Series. We can all agree yes, but there's no objective way to verify that on chain. We can use oracles and things like that, but that's what intersubjective staking is. So you can use Eigen to stake anywhere, but you can stake it specifically on Eigen DA at this point.
And that there's a process by which some of those non-fully on-chain determinable outcomes can be governed through some process of the Eigen holders.
Yeah. So essentially the token, it's the underlying, so there's Eigen, and then underneath there's B Eigen, which represents different forks or different opinions on what the result of a task or an output is. So that resolves itself under the hood. So whoever gets the majority of the change in stake allocation. So if it went from B Eigen 1 to B Eigen 2, now B Eigen 2 is the canonical Eigen token. So if somebody does something incorrectly, their B Eigen on the other chain is worthless. That's the gist of it. I prefer not to get it's a lot. But read the paper. It's
Yeah, no, there's so much fascinating work. I think we're going to have a lot of questions in the group. So let's, gentlemen in the front.
Thanks, Luz. So just if you use any ERC20 token, well, anything can actually drop in value, right? And so that means that the security of the system or of the particular AVS goes down possibly rapidly quite quickly.
Yeah.
Is there no mechanism that has a minimum security level, or because we can, an AVS can become, unoperable, right?
yeah. So it's on the AVS to get the amount of economic security they need based on some amount of compromisable activity over a certain period of time. So if like I'm a bridge, for example, if I have $100 million in unique stake, I probably don't want to allow more than $100 million to go over the bridge at any point in time. Otherwise, somebody can take that $100 million, they get slashed, or if it's more than that, they take that and they get slashed for $100 million, they make money. So it's on the AVS to do that.
And I would also maybe add to that, Brett, that this is perhaps slightly more optimal outcome. With other protocols, you also have that risk that the native token of that protocol, declines or goes to zero, in which case the entire protocol is at risk. The idea here is by allowing the use of somewhat more reliable tokens, people can more granularly nuance their economic security rather than relying on a newly minted token that may shoot up and down based on random liquidity things. So I think you can make the argument it's a more secure means of accomplishing the same goal.
Okay, so currently it seems that the Ethereum ETFs do not allow staking. So does that mean the more people purchasing Ethereum ETFs, the less secure the Ethereum blockchain will become? How does the Eigen level help to get around some of the regulation issues to allow the ETFs to stake?
Let's talk about that separately. I think it's a reasonable question, but I think it's a little bit.
Well, also maybe I could just add, Brett. I mean, there are, a fair amount of, ETH in ETFs, but the preponderance of ETH is not in ETFs right now, and it's not likely to be anytime soon. So it's hard to see that, in the foreseeable future presenting a challenge. Obviously, we'd like to see from a regulatory point of view, the SEC move off that position, but I don't know that that's a fundamental issue for the overall structure of Eigen Layer, at least from my point of view. Other questions?
Any intuition on what kinds of AVSs will opt for more slashable stake versus not? Like the sort of the capital distribution for different types of activities?
That's a good question. No, I don't have a good, we're still, there's a bunch of, people are creating new applications all the time. So what we're trying to do internally is group different applications into how they can determine how much compromisable activity they have on their AVS at any point in time, so they can determine how much unique stake they actually need. So it's something that we're working on.
And Brett, maybe I'd pick up on that really interesting question by saying, over time, Eigen Layer may provide another value oracle for other ERC20s, because the extent to which it's attributed value through Eigen Layer may be a factor taken into account of the market sentiment as to the value of a given token. So by creating another way of measuring utility value for different tokens, that has the potential of putting value data into the market. So I think that's another interesting, ancillary benefit.
Yeah.
Other questions? We have a few more minutes.
So you talked about slashing, but not about rewards. So can AVSs provide rewards? How do you see that going, et cetera?
Yep. It's a very interesting problem to solve because EigenDA is doing it currently, but it's not currently a market for AVSs competing based on rewards for flashable stakes. So we're thinking through what are the different models, the allocation models for stakers and operators based on the different types of AVSs that can exist. But yes, they do issue rewards. So initially, it'll probably be in their native token until they can start generating real revenue in some other token like USDC or ETH. But yes, the whole point is to attract some amount of slashable stake via rewards. So people actually provide stake and operate on the network.
I can ask a quick follow-up. So can they issue ERC-20s and then could those be restaked?
Yeah.
So you can have like restaking ad nauseum.
People can do what they want to do. Yeah. I mean, there's a certain amount of like opinion the protocol layer should or should not have versus, allowing people to do whatever they want. So, there is a bit of discretion for AVSs and stakers and things like that. Whereas, we want to allow for a whole bunch of flexibility.
Maybe just to add to that as a sort of general observation here, I spent the last couple of days in Washington, D.C. There was DC FinTech Week, and I visited, amongst others, the SEC. And I think it's just a good opportunity to remind everybody in this room that as far as the current leadership of the SEC is concerned, all of this activity is illegal. And if you think that that does not make sense, you should, let your voice be heard. That is the SEC's position, is that each and every token is functionally a security, and that all of this needs to take place on regulated securities exchanges. And if that makes no sense to you whatsoever, and it certainly makes no sense to me and to many people, then whether you are a citizen here or just an observer, let your voice be heard. We have an election in less than 2 weeks, and it really counts.
That may not be the major point in the election.
Oh, yeah.
We should only be so lucky, but it is an important point, and your representative should understand what you think about that. More questions?
Thanks for doing this. I have maybe a more basic question about restaking and economic security in general. You talk about malicious attacks and compromisable activity. In proof of stake networks, is there actually any evidence that this sort of thing happens? Or maybe say it differently, what types of stuff are happening on Ethereum that a restaking protocol is trying to solve?
I think I understand. So like, is there any slashing on Ethereum?
Economic security, or is it just a meme, I guess, is maybe.
No, it's not a meme.
Are we preventing something on chain that's happening today with the Eigen Layer?
I have a very good paper to send to you, but for some people who don't know, so what does slashing solve? Is that part of, yeah. So he mentioned token toxicity as one way of penalizing operators, but that's not efficient, right? Because if one person misbehaves, everybody gets penalized for that misbehavior. Whoever's holding the token now loses value. So slashing offers a more direct way of penalizing the operator without penalizing all of the other token holders. So I'll send you a paper. I will follow up afterwards, but that's the gist of why slashing is valuable.
Other questions? I mean, I would only just add, I'll just add to that. I mean, obviously what makes any crypto economy strong is that it's constantly under attack in every possible way imaginable. And, security is the single most important thing. And this is economic security is how you achieve that. So I think there's no more important factor because at every given moment, somebody's out there thinking, how do I crack this system?
Thank you. So following up on Andreas's question from before, so can I as an AVS say, I want accept some collateral, but I don't accept other collateral?
Yes. Yep.
Yeah. And second question, how many slashing incidents do you have and how often does this happen?
None right now. Yeah, none has happened so far. So everybody's developing, it's all in development. People are developing AVSs. We're, working through the nuances of Eigen Layer itself. So there hasn't been any slash, like we haven't released slashing yet. So we're releasing slashing about in the first quarter of next year. So right now it's a matter of playing around with the parameters and making sure it works properly. So zero.
It may suggest that slashing is doing its job.
Yeah.
That it's useless.
Pretty much, yeah.
The proverb says too soon to tell.
Yeah.
Maybe time for one more question. Anybody? Two more questions.
Let me just follow up on my earlier question. You mentioned that there were some applications where you thought unslashable stake was the right thing. Can you give some examples?
No, I'm still figuring it out myself. We're actually putting out like a paper on the different types of penalties, and we're getting to which applications actually need, just civil resistance versus like actual slashable stake. So if you want to think about that, I would love that too.
Can I just ask about the end game? I mean, you're basically setting up a system. I'm just gonna do a little bit of blue sky thinking here, right? So we're setting up a system so that you have some operators of some applications so that they can credibly state that what they're doing is okay, right? So that
Yeah, they
don't
make
scoop
credible
people.
commitments.
Yeah, they make some credible commitments to
Yeah.
do something. So really what we're thinking about is we're maybe having, I don't know, say a banking application or something of that kind where I'm a sequencer, let's say, on a side chain. I want to make sure that I can't screw people.
Yeah.
And I secure this with a stake. That's kind of the idea we're after here, right?
Yeah.
And so the alternative is one where you trust the other party, you trust, say, a sequencer. Is that we're just trying to understand what the bigger market would be for this.
Yeah.
So that you can actually ask which question do you solve, and is this a path to creating more competition, or would these, if you have a trusted entity, for instance, against a non-trusted entity, right? And is there something, can you actually compete with that?
So, okay, so
There's a bigger question about the application space here, right?
and I think and correct me if I'm wrong, I think it's an even bigger question, which is why decentralization at all for anything? I think can that sort of be boiled down to that fundamental question right there, which is how does decentralized applications compete with centralized applications at all? It's a good question.
Yeah, but if they could, I mean, you could, okay, I don't want to have a discussion here, but you could imagine that you could use, as a trusted entity, you can use, say, Ethereum as a settlement layer, right?
Yeah.
You build your own L2 and then you use that, periodically just to prove something, whatever, right? So that because it's more efficient to use in a way. And so, if you use it in that way, then you just rebuild an economy which just uses Ethereum for something which is not intended to be. Whereas this one could be a solution to creating a competitive counterweight without having a lot of capital behind you or something. That's one. I mean, I'm not really sure if I'm making this clear, but I think there's.
Let's talk about it. I think I get where you're going, but let's talk about it.
One more over here.
I'm a little bit perplexed by your answer to Siama's question being no, because when I talk to a lot of startups, right, they typically, when they launch a new product, is like, okay, our customers tell us this, the demand side tells us what we build. But it seems like this is being built like without knowing who the potential customers are. So I'm just kind of curious about.
I would say it's the complete opposite.
Okay.
Yeah, I mean, like we reverted to unique stake. I mean, economically, it makes a lot more sense, but there was a tremendous amount of feedback from AVSs and operators that they wanted their own exclusively slashable portion of stake, for example. So
maybe the answer is everyone, all the AVS, they want this. To the question.
I hope so, yeah. Yeah.
All right, well, look, we have a few minutes before the next session. I just want to thank you all for participating. Thanks, Brett.